Hey traders, how's everybody doing today? It is Monday, October 20th, and as you can see, it is incredibly windy where I am right now. The market just closed a little while ago, and a few things happened today that made me want to make a new video because I realized that there were a few things that I could talk about that relate to my strategy in kind of like a bigger picture way that I maybe hadn't covered so much in the past. So I got the dead cat on the microphone. Hopefully it's not too windy and you guys can hear what I'm saying. But we'll fix that in post if not. First thing I wanted to go over today is the fact that I am traveling right now. I have two different primary residences that I go back and forth between, and so I'm always in one of the two places, and the other one is the one where I've got my main setup with my two big external monitors. That's where I was at when I did my boot camp a couple weeks ago, and now I'm at the other place, and I don't have any external monitors with me today. So today I was trading exclusively on just one screen, just the laptop screen, and that was it. And I made over $2,200 today, nearly a 30% P&L. And this just proves that you don't need a wall full of monitors in order to make money. And you don't need a million indicators on your screen to make money. For the most part today, the only thing that I was looking at really was just the candlesticks. I had my volume bars up, of course, but because I had such limited screen real estate to work with, because I only had my one small laptop screen, and it's a small laptop. It's like a 13-inch laptop. It's a very, very small laptop. That's the only thing that I was looking at today. Because of this, I didn't have any of my normal indicators up that I usually look at. The only thing that I had was just the Japanese candlesticks, the volume bars below it, and then of course I had the 200 EMA and my different EMAs on top of the 200 EMA that I work with, and that was it. So I'm just looking at candlesticks, and I think this is a good thing to call out because I think a lot of people really try to lean on indicators as a sort of security blanket or some type of a magic bullet or something, and just think, oh well, if I was wrong and I had a losing trade, it's because I didn't have the right kind of indicators on, or if I was successful, it's because I had the right kind of indicators on. I believe that if you know how to understand candlesticks and see what the candlesticks themselves are telling you, then that's really all you need to actually make money. And so today, that's all I was looking at was just the candlesticks and then my EMAs that I had on my main 1-minute candlestick chart. And that's all I had. And yet I still had a really, really nice day. Big P&L. So that was point number one, is that you shouldn't look to a bunch of monitors or a bunch of indicators as any sort of a magic bullet or a security blanket. You should look at your own ability to interpret the candlesticks and see the patterns and the motion that the candlesticks are making on the charts as your main method of telling you when to get in and when to get out. So that was point number one that I wanted to make today. Point number two is that you should always get in as soon as you see your signal. As soon as you see your thing that you were looking for that tells you to get in, that's when you should get in. And sometimes that will be a little bit earlier than you expected, and sometimes it'll be a little bit later than you expected. And so you can have best practices and set up an idea of best practices in your mind that you should strive for, and I do that But sometimes it doesn't always happen in exactly the same time frame that you were expecting it to happen in. And that happened today on Apple. So before we opened up, I was keeping my eye on Apple. We had already had, really strong last couple of days from last week. And I actually made quite a bit of money on Apple on Friday as well, because on Friday, I believe it was Friday, either Thursday or Friday, I read about how Apple has got the exclusive streaming rights to F1 racing around the world. And, it might not be such a huge deal in America, but F1 globally is a big deal. So when I read a piece of news like that Apple has secured the streaming rights to F1 globally, that is a piece of news that gets my attention. Now, not all news is created equal. Sometimes you'll read a piece of news and it's just sort of like a very insignificant piece of news, and then other news seems like it's more important. And when I heard about the F1 thing, I thought this is actually a little bit more important piece of news than just, the whatever rumor. It wasn't a rumor, it was an actual breaking news, and it was news that was actually pretty relevant to a lot of people. So because of that, it got my attention. And then this morning before market opened up, I had heard more news about how the iPhone sales were exceeding expectations. And so it got my attention. It's not that I told myself, I'm going to go long on Apple today before the market opened up. You never want to have an idea of, like, I am going to do this. You don't ever want to tell yourself, I'm going to go long or I'm going to go short. But when you see certain pieces of news that seem relevant or like weighty, that can pique your interest, and then based on getting your interest piqued because of whatever piece of news, then you can start to pay more attention and sort of micromanage what you're seeing rather than seeing it as just sort of a broad thing of like, well, whatever, maybe I'll pay attention, maybe I won't. So before we even opened up today, I knew I was going to be paying very close attention to Apple right away. And then that brings us to the next part of this whole idea, which is how sometimes things will unfold in a time frame different than the one that you expected it would be. And so normally I like to wait at least 5 to 10 minutes before I get into anything on the day, just to give myself extra confirmation. But this morning, over the course of the weekend, we had a really nice big gap up on Apple. And so when you have gaps, doesn't matter whether it's up or down, when you have a gap, one of two things is going to happen. It's either going to fill the gap at some point in the next day, or it's going to continue in the same direction that it gapped, which is known as a gap and go. And so if you've watched any of my videos at all, you'll know that the 200 EMA is the single most important indicator that I have on my charts all the time. If I could only have one single indicator, the 200 EMA would be that one indicator. So this morning, right before we opened up, we had gapped up, just in the last 30 minutes before the open, and price retraced back down to right at the 200 EMA on the 1 minute candle. And then on the first minute of the open, for me, 8:30 a.m., giant green candle. You can go back yourself and look at the 1 minute chart on Apple today, and you'll see that very first minute when we were open, it was a huge green candle. So it bounced right off of the 200 EMA the first minute. I opened up my first contracts on Apple, just a few of them, my first contracts at 8:31, because what I figured would happen is we would either have that initial spike right off the first minute and then we would retrace and start to fill the gap, or we would keep going. And so it turns out we kept going. So we had a gap and go this morning on Apple. And so basically after that first minute, I just managed my trades. I got in and out a number of times. I bought a few contracts. I'd wait for big candles. I'd close a few contracts. On small retracements, I'd get in again, wait for big pushes. I'd get out again. And I believe I traded 25 contracts today on Apple. And I still have 3 or 4 contracts open right now because it's Monday. The expiry is Friday. I made nearly $2,000 on Apple today. So there's no way I'm going to lose money on any of the remaining contracts that I still have open. So this is a good time to actually be a little bit more, to accept a little bit more risk on the last few contracts that I still have open on Apple, because I already locked in all this profit earlier on today in the day. I traded a handful of other things too, but the other contracts that I traded today, I just traded really small, like just a few contracts, like 2 to 3 contracts on all of the other tickers that I traded. And I believe every one of my trades was a winner today, but I believe I made less than $100 each on the other tickers, but Apple was the big ticker, the one that got me like $2,000 today. So just a word about diversifying. I spread it out. I traded a handful of things to just make sure that even if one of them wasn't working, I had other contracts that were working. So that's an important thing to do. And so last thing I wanted to mention, kind of going back to what I just talked about a little bit before, I've said in the past, you shouldn't pay attention to the news. And what I mean is not that you just simply shouldn't pay any attention to the news, but you should have a discerning eye about what you choose to put weight on in terms of news, because there will always be news about everything. There's news happening all around you all day, every day about everything. But which pieces of news are you actually going to focus on, and which pieces of news are just not really very relevant? And like in trading, that's a skill in itself to develop, and it's not something that happens overnight, but it's just after months and months and years of doing this every single day, you'll start to realize that like certain bits of news make more of an impact on things, and then other bits of news don't really matter too much. So just try to learn, and you can do this in hindsight too. I mean, like after each day goes by, you can remember back to before the open and say to yourself, okay, what was happening today, and what actually made a difference and what didn't make a difference. And it's just trial and error. It's just trial and error every single day. So that's it today. Really, the main focus of today's video was just to talk about how you don't need a ton of monitors. You don't need a ton of indicators. You just need to be able to understand what the candlesticks mean and what the patterns mean. It's a visual thing. It's like looking at artwork. Candlesticks are artwork. And if you can interpret artwork on your charts, that's the way that you'll actually make money with this stuff. People think it's all about business and numbers. You don't have to be a business person. You don't have to understand numbers. You don't have to be good at math. You only need to be able to understand what do the candlesticks mean and what are the patterns telling me when I see the patterns on my charts. And that's it. And so today was a perfect example of, one screen. It's all you need. And you can make money if you know what you're doing. So till next time, hope you guys also had a good day today. And, keep up the good work with the trades if you're being successful. Just remember, the trend is your friend. You always want to look for those little retracements to get in, those little spots, support and resistance levels, super important as always. And till next time, take care of yourselves. Bye-bye.